Hello everyone, this market maestro just said something that will change everything. Before you even think about selling your Tesla shares, you should listen to what he has to say. This isn't just a guess. Jim Cramer guides us through the maze of market trends, earnings reports, and the exciting long game of Tesla's innovation-less strategy with the precision of a Tesla on autopilot. We'll also look at the roadmap that experts have laid out for us. Recently, Tesla's stock price has gone through the roof. But is it just about the cars, or is there more to the company's stock value? Before you make a decision, take a moment to watch this video. We'll talk about the allure of Tesla's shares and why selling now might not be the best time to get rich. To show your support, please like and subscribe to Tesla Stock News. Now, let's start the video in a surprising way. You might want to change your plan after reading Jim Cramer's latest insight. Champion Cramer, the view that Tesla's long-term promise is not only exciting but also promising. Times like these remind us of how volatile and exciting the market can be. But let's take a step back and talk about trust, where it comes from, how we give it, and why. Cramer says he's sometimes too harsh on management teams and other times too lenient. Have you ever been in a similar situation? Have you ever put too much faith in the promises of a turnaround, especially when a company seems beyond repair? It's a dangerous situation, and Cramer says he's been there before. When it comes to monumental turnarounds, even the best CEO can face a tough timeline. Cramer warns people not to bet too quickly on these kinds of comebacks. This is a good lesson for all of us who want to make smart long-term investments. Now, let's talk about Elon Musk, the CEO of Tesla and a visionary in the auto industry. Musk has made big claims about Tesla's future, especially about how it will make money from fully autonomous driving technology, even if car sales don't make any money. Is that future closer than we think? Elon Musk's recent comments about Tesla's possible peak margins in a world after full autonomy have sparked interest and speculation in the financial and automotive sectors. The idea is that once Tesla achieves full autonomy with its vehicles, the company's profits could skyrocket. This is based on a number of factors, including the fact that as production of Tesla vehicles becomes more efficient and economies of scale are realized, the manufacturing costs per vehicle are expected to go down. This efficiency, along with the possible lower need for physical inputs if Tesla can shift its focus from production to software, can lead to higher margins. Full automation opens up a lot of new ways for Tesla to make money. Musk has talked about the possibility of a robotaxi network where people could add their fully autonomous Tesla cars to a ride-hailing fleet when they're not in use. This could make money for both the owner and Tesla through a revenue-sharing model. Tesla could also charge for software subscriptions and updates that would allow full autonomy. With full autonomy, the expectation is that accident rates will drop because humans won't be driving, which could mean lower warranty and liability costs for Tesla and higher profit margins. A fleet of fully autonomous cars creates a huge amount of data. This data could be useful for improving Tesla's FSD technology, making money directly or making the customer experience better, which would lead to more sales and customer retention. Musk's predictions are more likely to come true because Sandy Munro is optimistic. Munro, who has a lot of experience in engineering and manufacturing analysis, has broken down Tesla's production methods and prices in great detail. Pointing out how Tesla's method is different from that of other car companies, he thinks that Tesla's goal of adding to peak margins through full autonomy is possible because he understands these cost structures and thinks that Tesla could change the way the automotive industry does business. Munro knows that achieving full autonomy is as much a technological as a regulatory challenge. However, once it is cleared, Tesla could take advantage of a market that traditional car manufacturers haven't yet explored. This could make Tesla not only an auto company, but also a technology leader in AI and mobility services, which would increase its market value and financial health. Think about the fact that Tesla's automotive gross margins were already some of the best in the industry in 2023. This is something that is often talked about on earnings calls. For example, in Q4 2022, Tesla reported an automotive gross margin of about 25.9%, excluding regulatory credits. Musk's optimistic view points to a future where these margins could grow a lot once full autonomy is reached. How good the software is getting and gives us a driving system, which is a very complicated job. Because of this, every update might bring about better object recognition, decision-making algorithms, and better car behavior and a huge variety of driving situations. Tesla is not only improving its current features, but it is also getting ready for the next version of its self-driving technology. With the help of beta users and real-world driving data, Tesla's FSD technology is changing quickly thanks to a strong feedback loop. Speed up this data-driven approach is important for machine learning systems because it lets Tesla improve algorithms based on large and varied sets of data. Ultimately, the company wants to reach a point where manual driving is no longer necessary and is instead a choice. As for what's next for Tesla, FSD experts are predicting even more improvements. Think about advanced object recognition, better decision-making algorithms, and seamless merging with cutting-edge AI and machine learning technologies. It's these constant improvements that have Cramer telling people not to sell Tesla shares right now. But why? Stay tuned for Tesla's third quarter earnings call, where we'll try to figure out this financial puzzle. Elon Musk saw AI as a way to make Tesla the most valuable company in the world, even more valuable than the $1 trillion. Write down some questions you might have to start. Tesla wants to let other companies use its autopilot and even the FSD suite. This comes after Tesla and Ford announced they would be working together to share their supercharger network. This is in line with Tesla's open innovation philosophy, which was shown when the company decided to let rivals use its patents by licensing FSD. Not only is Tesla expanding its income streams, it's also making plans to become a more financially stable business. This strategy, similar to a tech company selling software, could help more people use Tesla's technology, increasing the company's impact on the world stage. Musk says that Tesla's FSD technology could be used in a wide range of car classes, from high-end to low-cost ones. This would not only change how people around the world think about and accept self-driving cars, but it could also make cars 5 times more useful. And let's not forget the data collection part with more cars on the road. Vehicles that use FSD, Tesla's data pool would grow huge, speeding up the system's evolution and getting us closer to fully self-driving cars. Tesla wants to do more than just make cars. Musk has hinted at how autonomous humanoid robots might affect the value of the company. If Tesla is able to make these robots on a large scale, the effects will be huge and complicated, going far beyond the auto industry. Development of humanoid robots that can do tasks that humans currently do could completely change the job market. These robots are expected to take on boring or dangerous tasks that need to be done over and over again, which could lead to huge improvements in efficiency and safety across many industries. Tesla's move into robotics has big economic effects. If these robots are successfully integrated into daily life and industry, Tesla's value would go up a lot because the company would be able to offer a wider range of products. Beyond its car and energy storage businesses into a new area with a lot of room for growth chances in the market. Musk thinks that these robots could help with care for the elderly, fill in for workers who aren't available, and even do work that humans can't do, like in disaster zones or on other planets. The technology that powers these robots might not just be used by a few units, but could be part of a larger ecosystem. For example, the AI and machine learning improvements made by Tesla in its work on self-driving cars will likely be used in humanoid robots as well, since both involve making decisions about the environment and being aware of our surroundings. Musk thinks that innovation isn't about keeping patents to yourself. It's about getting the smartest people to work on new ideas. This way of thinking is why Tesla supporters like Sandy Rowe see a future where the company's quickly changing technology platform benefits everyone. So how will these advances affect our daily lives and industries? Can Tesla redefine the limits of innovation with its humanoid robots? What could these steps mean for investors and the global economy? Feel free to leave your answers in the area.